Hey folks, Dan Frio here, the Mortgage Update. Today is, I don't have a watch on, and you can see I had surgery done yesterday. But it is September 10th, 2020, and I'm going to show you some shocking numbers right now. Don't fret, because mortgage rates didn't really move today. Actually, if anything, they just stayed stable. They might have got a little bit better, but the headline news you're going to see here in a second doesn't show that, and I'm going to explain why. And then we got some numbers in regards to employment, unemployment, and different claims there, which was kind of in line. But the stock market, again, pigs got fat, hogs got slaughtered. So that's what we're going to talk about next. Don't go away. We'll be right back. Okay, folks, headline numbers again. The market continues to drop. I was out yesterday. I know what was going on yesterday. The market was up. And what happened is there was a lot of profit taking at the end of last week. A lot of short sales were covering their positions. I won't go into what a short sale is. A lot of margin calls and some other things that took place. And people were just taking some money off the table. Usually when technicals or the NASDAQ hits a correction phase, it's usually a 3-day phase, believe it or not, 3 days. And we saw that. And then yesterday we had a comeback. And now today the bloodbath starts again. So again, this is all good news. So I'll explain it this way. Good news for homeowners and buyers because people were taking money out of the stock market. They don't want to lose anymore, and they move it into the bond market. So what happened today with mortgages? You're going to see this number and say, Dan, oh, Lordy, did you lock me in? Well, this number is kind of a little bit deceptive, and I'll explain why. Every month, this number and this thing resets. So just think of it at a certain time of every month, everything squares up and goes back to zero. That being said, today there was an adjustment of about 17 points, that basically brought us back to zero. So we actually ended the day up 5 basis points, and you can see that right in here, and I'll zoom this in so you can see it. So this 12 was the adjustment, the 17-point adjustment that took place to bring us minus 12. So don't worry about this number. Actually, we were up 5 at the end of the day, thus making mortgage rates basically stagnant. And I predicted that. And again, what I always say in here is my thought is we're going to stay steady right through this area here, and that's where we're staying. Okay, so the newbies out there are saying, Dan, what in the world are you talking about? What is this number? So if you're a frequent watcher, please don't turn the dial because I'm going to explain this fairly quickly, and then we're going to get on to what I see in the next day, week, and couple weeks out, and where we're going to go from here. This is what is happening to mortgage-backed securities. What is a mortgage-backed security? Well, when you take out a mortgage, those get lumped in with a whole bunch of other mortgages into a bond offering. That bond offering then goes out to investors, sold as a bond that is full of mortgages. What this number here represents is what's happening to the price of that bond. Okay, well, how bonds work, the more you pay for a bond, the lower the rate of return you get. The lower you pay for a bond, the higher the rate of return you're going to get. I'll make it really simple to you. So let's say, for example, you have a $100 bond and you pay $50 for that bond. So at maturity, you're going to get $100 back. Your rate of return is 100%. You're doubling your money. Okay? So that's our benchmark. So on that bond, just to make it as simple as I can, let's say you paid $100 for that bond. Upon maturity, you get $100. That means you have a 0% return. So do you see what I'm saying? The lower you pay for the bond, the higher the rate of return, the higher the rate, the higher the interest rate. So we want that rate to drive up. So basically, to bring the rates down to zero. So that's where we would like to be. It'll never happen because mortgage rates always have to have a positive because there has to be a profit margin in there for the banks. So you will not see mortgage rates at zero. Just letting you guys know that. So when you see clickbait of, mortgage rates or interest rates could be negative, they're not going to be negative on your mortgage. So sorry about that. So that being said, this is why we follow this thing. And basically this is, the lines here are basically giving us ceilings and floors to where we should be trading. And they're working out very well right now. We've been in a steady pattern here for the last month or two. And so all these are technical things that I follow. And I follow on your behalf. You don't have to subscribe to any of these channels. These channels cost me thousands of dollars a year to subscribe, and I'm going to, starting next week, I'm going to give you even more details for those that really want to dig in on this. I'll do my rate update every day, but then I'm going to have a secondary one that I post that really dive into things for realtors and mortgage advisors alike. So I'm going to dive into that so you guys can learn, this market, because the more you're informed, the better of a salesperson you are and a better advisor you are for your clients. And that's why I do this. So this is what's been happening with the mortgage MBS prices. They've been pretty stagnant over the last month or two. We've had hiccups, and this is why a lot of people use me. As this is going down, you got to remember rates are going up. I'm not locking. I watch a whole bunch of technicals so I can lock you in at the perfect timing. So today, again, we saw MBSs. They actually ended the day at +5, but with the adjustment that transpires, we ended up at -12. So don't freak out at this number. It was just what we call a rollover, and that brings us back to a par. I don't want to get too technical for you, so let's leave it at that. So how did the market end up? Well, the stock market crashed another 400 points. I think we gave everything back that we recovered yesterday. That's not good, but it's good for us in the bond market, or us in the real estate business or the mortgage business. The bond auction that took place today had fantastic results. And that was one of those things, that the reason why we had a good day for mortgage-backed securities. Here's the numbers that we're watching and that came out today. Employment numbers came out, as well as inflationary numbers. So let's get to those numbers over here. And I'm not going to inundate and completely bore you to death on what's going on. Let's just hit the highlights. The biggest thing, the two big components that the Fed controls, or what we call their mandates, is full employment and keeping inflation in check. So that's what we're going to look at today. Employment numbers. Where were we today with those? Initial jobless claims. The consensus was 846,000. We were at 884. Okay. But I want to dig in on this a little bit more. And again, not to bore you, but there is things that we have to talk about. All right. So when it comes to employment numbers, and what's the saying that they say? Oh gosh, I forget what the words are. You can find a poll or a chart or something to validate basically any argument you have. And, so some of the headline numbers for unemployment, this is where I'm getting at, has our unemployment rate just dropped to 8.4%. Okay, well, that's one little piece of the puzzle. There's a whole nother piece of the puzzle that doesn't really get factored into these numbers. And I've said in the past, our unemployment rate is basically, I'm saying, between 15 and 20%. And I'm going to show you how I can validate those numbers. So I wrote down a whole bunch of notes just to make this make sense to you. Jobless claims were up 884,000. That was unchanged. And basically, I think that's the number that we just went over. Continued jobless claims went up 93,000. That was worse than expected. But a number that most people don't pick up, and I'm sorry, I keep clicking my chair, is what they call the PUA. And I'm going to go back to a chart here just to show you these numbers. The PUA is a pandemic unemployment assistance claims. Okay, those are unemployment for people that normally would not get unemployment. So let's say you're a contract worker. Let's say you're a DJ at a club that just does your own thing and the club pays you. Well, they're shut down. You have no money coming in, but you really don't work for that place. So you really don't get unemployment or can't qualify for unemployment. Well, you can through the CARE Act, and that is the PUA. those pay unemployment benefits to people that normally wouldn't get it. Well, the bad news is we had 1 million people added this week. We had 2.6 million people added last week. When you factor in all those numbers to the unemployment rate, you're actually at 17%. And that number can, be adjusted a little bit here and there. And I think it's between 15 and 20%. Why? Well, also in that 17%, we had a ton. We had a couple 100,000 census workers that are now employed temporarily for the census that will eventually go to the unemployment section. So that's why I'm truly saying, you take out the census workers that are it's a temporary gig, you take them out of the employment numbers, and your unemployment rate's going to go up to the 20% that I'm estimating. So that's where I'm getting at there. So these are a lot of things that are backing up my claim of, one, why I think the stock market is overvalued, and I'm going to go over tomorrow a little more in detail to this. We have that greed factor that I started posting once a week, and the greed factor went from being okay yesterday or 2 days ago after we had the sell-off to today we're back to the greed factor, meaning stocks are overpriced. And you still have a lot of stocks going up on a daily basis, Peloton crushed the things. You still have certain stocks going up that a lot of it doesn't make sense. They're overpriced, and that I'm going to stick with it. You guys can bash me down below if you want. I'm saying we're going to have a correction. We're having it again. But yesterday's buying, I can't figure that one out. Because there's not a lot of technicals there that show that the stock prices should be where they are. Why do I talk about this stuff? It all correlates to where we are with mortgages. If people think the economy is fantastic and they're buying stocks and everything's going well, they're going to pull their money out of the bond market and start buying stocks. Thank goodness for the Fed, because the Fed is the entity that's in there right now, keeping mortgage rates stable. And they're buying in tune of about $5 to $7 billion with a B every day in mortgage-backed securities to keep this stable. So my thought process for the next week or so is we're going to stay stagnant. I don't think we're going to have a big rally in stocks because there's nothing really there. We have an unemployment that's at 17 or 18 or 20%. We have some earnings coming in that are good, but others, half the country's still shut down. So a lot of benefits are being paid out. I made this stat about a couple weeks ago that most people don't realize. When people lost their jobs, so you got furloughed, you got a pay cut, you got whatever. I don't mean that in derogatory manner. We had about $800 million in wages taken out of the system with the pandemic. We've had 2.1 trillion with a T, 2.1 trillion in government benefits going out. So we've actually paid out 3 times the amount of what was lost. So there's a lot of people and I know some people are worse off. A lot of people, I hate to say it, are better off with the unemployment claims and all the government perks going out there. And again, I'm not trying to upset anybody, because you might be in a position where you're like, Dan, I can't live on this $800 a week or whatever. I was making much more. I get it. But unfortunately, there was a lot of people that weren't making that are making it now. That has gone away. So I retro back. That stopped a couple weeks ago. They're still in works to restart something. What that is, I don't know. But if you're out of work, God bless you. I hope you get through everything okay. That's why refinances. I think people are still refinancing like crazy to help their situation. In most cases, when we refinance you're skipping at least one payment. Many cases 2. pull out some cash. There's a ton of equity in people's homes right now. Maybe you're like, Dan, I don't want to owe more on my house than it's worth. Well, you know what? Put some money in the bank and then prepay it if you don't have to use it. Many people are probably living off credit cards right now. Those credit card rates are probably, okay, you have a 0% introductory rate for 6 months. After that, it's probably going to go to 20 or 25%. So please be careful. And I'd love to talk with you, or at least, put an application in. We can go through every scenario possible to help you guys in your situation. And maybe there is just nothing, maybe we come back and say, just keep trying to do what you're doing. But maybe a mortgage refinance could help you. Rates are 1% lower than where we were last year at this time. So if you bought in the last year, in the last 6 or 8 months, or a year and a half ago, 2 years, between 1 and 2 years ago, if you bought or refinance, look into it again, especially if you're struggling right now. If you're looking to buy, God bless you. You're in a good position because rates are crazy low and there's all kind of things going on. So that being said, I'll quit rambling. My name is Dan Frio. If you'd like my help, please, I'll go over that with you in 1 second. All I ask you to do is please give me a thumbs up if you like the video. Don't forget to subscribe down below. Hit the bell. Every time I do post a video, you'll get an alert. It might be something you want to watch. I try not to clickbait, meaning put a title out there to just make you click it and say, oh, I gotcha, but you gave me a click. I don't care about that. I basically want to inform you. So I'll try to make my titles as informative as I can. If you want to watch the video, awesome. If you don't watch it. That's okay. I'm trying to reach as many people as I can. So how do you get a hold of me? What's the best way to do this? You can go to, let me put my glasses on, my cheaters, and show you my website. It's therateupdate.com. You can go right then. Down here, it's going to show you how you can reach me personally. Call 844-775-LOAN. That's 844-775-5626. Or here's what I ask a lot of people to do, and I probably get 10 to 15 of these a day. If you're in the process of getting a mortgage right now, you're going to get either a fee worksheet, and that's what I do, or what they call a loan estimate. You're going to get one of the two of the things. To get a second opinion, email me the one you have, and I'll write through it. I'll scribble all over it with a red pen. So if you've worked with me recently, you know this is what I do. And I'll say, here's what I can do. And in most cases, I'm going to say almost all cases, I'm either beating the competition on rate, on fee, or both. Now, let me clarify something too. So, here's what I don't do. I don't say, I beat them on rate, and then I just jacked up my fees out to the roof, and then I beat them on rate. No. I'm going to do either this. I'll give you the same fees with a better rate. I'll give you the same rate with better fees, or I'll do all the above. I'm not going to, lower one and increase the other one substantially. It's going to be either a win, or a win-win. Hope you get what I'm saying there. Or I might just email you back saying, what you got is awesome. Sign, seal, lock it, close, and don't look back, because what they're offering you is fantastic and I can't beat it. That doesn't happen much. It happens every blue moon. And for those out there, I don't know how you're getting it, but awesome. Good for you. So the best way to do that is email me. My name is Dan Frio. You can email me at D for Dan, Frio, which is Frio, at preferredrate.com. So that's dfrio@preferredrate.com. Or if you like, you know what, Dan, I trust you. I know you after watching all these videos and I want to use you. You can do one of two things. You can click the Apply Now button, click it there, and then choose me or one of my loan officers that can help you. Click one of us here and complete the application. Or you can just go through here, get a quick quote, or go through these questionnaires and get the ball rolling right away. And if you do any of these, if it's during office hours, within an hour, somebody should be back with you. You'll get an instant email saying we received your request and we are on it. If I don't call you back within an hour, please, I hate to say this, please reach out to me. Shoot me an email just saying, hey, Dan, I did the online application. Can you have somebody review it and get back with me as soon as possible? I will respond back to you even if it's 10 o'clock at night saying, I apologize, you fell through the cracks. I'll make sure personally I get on this first thing in the morning. So that's it for today. I hope you like what you see. I will hopefully see you tomorrow with I had something on my finger. I actually had a growth on my finger. I know it's kind of gross, but I had it taken off yesterday. I had surgery, so I wasn't in, and I did not post yesterday. So I had several people ripple out to me saying, man, I was hoping you would give me a rate quote yesterday when you were under the influence of the medication that I was taking for pain relief. So that's it for today. God bless you. Take care. Be safe. Be sound. And I look forward to seeing you tomorrow. God bless. Bye-bye.